Let's get some perspective in terms of what drove markets today. We are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. Given the fact that this week is going to be such a busy week, at least from an economic data front, not forgetting US CPI as well as the Fed meeting, what's the market sentiment as we kick off the week?
Yes, we're fairly neutral at the moment. So the all-share index has been flat for most of the morning. We've just slipped into negative territory, but this is really being driven by the resource index, down over 1%. So you're seeing some of the resource counters coming off. There is a little bit of news around some of our resource companies. We had a trading update from Together. We had some news around Glencore's bid for Tech Resources coal operation. But really, it's pretty mixed. So if you look across in Europe, we've got both Germany and France up about two-thirds of 1%, and we have the UK market also essentially flat. And I think, as you said, it's a very heavy economic data week. Everyone is looking at that FOMC meeting on Wednesday. We've got the inflation figures the day before, so we're expecting to see inflation moderate in the US down from 4.9% to 4.1% in the headline number. We also have retail sales for South Africa out on Wednesday. We've got mining data out on Tuesday. So there really is a lot going on this week. And I suppose we take it announcement by announcement.
Speaking of announcement by announcement, we have Telcom earlier coming out on the Stock Exchange News Service confirming that actually they have been approached by the consortium led by its former CEO, Sipho Maseko, as well as the PIC. That share price at some point rose about 9%. What do you make of these types of developments, and does it raise the prospects that we could see more corporate activity, perhaps even with MTN coming back to the table?
I think it's very possible MTN comes back to the table, but I think it's very important to understand at this stage it's all speculation. So Telkom announced essentially a cautionary this morning and officially kind of acknowledged the offer. It is unsolicited, exploratory, and non-consensual. So it's kind of one of those situations where where there's smoke is there fire. It's the kind of thing that people will buy in the market. The saying in the market is you buy the rumor, you sell the fact. So certainly this morning a lot of people kind of excited about the potential of a tie-up. I think the idea that Telkom gets a new anchor shareholder is fairly exciting to the market, especially after the announcement of the impairments where they were impairing around 13 billion rand. This kind of just, the market is hoping, I think, that it will draw some sort of line under the share price fall that we've seen so far. And obviously, new capital partners that are sniffing around is always good for shareholders. So will MTN come back to the table? I mean, at the stage, MTN pulled out of talks because of that bid by Rain as well, and Telkom's desire to have non-exclusive talks. And MTN obviously wanting things not to be delayed, and they wanted to be the only ones in talks to take over Telkom. So a lot of moving parts, and a lot of, I think, excitement around Telkom's shares at the moment. And yeah, as you said, up significantly this morning. It has moderated, but we're still sitting up about 4%. So market definitely giving credit to the idea that Sipho Maseko and the AfriFund Investments Consortium might be able to get this right.
Earlier today, we had Vukile Property Fund releasing their earnings, and I'm curious to understand your assessment, at least of the property side, retail property sector that is. Which do you like, those that have a more increased exposure to the rural and side of things, or those that have exposure more to the urban counterparts?
Or neither, I suppose. So, if you look at Vukile, they've seen very positive developments. They're very low vacancy rates in their rural operations, and I think the rural property, especially in retail, so malls, shopping centres, etc., has been very resilient given the underlying operating environment. But it's a difficult business to be in. One, we've got obviously this persistent load shedding, which has now subsided to some extent, but that makes it very, very difficult for mall operators, and when I say difficult, it makes it expensive. They've got to install solar plants. Vukile has, I think they've got about 10% of their energy requirements, across I think it's 20 solar plants, but it makes it difficult. At the same time, you've got high inflation, which is putting pressure on consumers, and you've also got high interest rates, which is again putting pressures on consumers, but from a different angle. Anyone in debt, any credit sales are going to be that much less attractive. So, looking at Vukile's results, they are saying that they've been surprised by the resilience of the South African consumer, especially in the rural areas. The issue, unfortunately, is that these kind of effects are lagging. So while inflation is up now, and yes, that's a more immediate impact, the consumer gradually weakens over time, and then it happens all at once. So I would be cautious around the share price. It was a very optimistic update from Vukile. It's a very well-run business, but you've also got to realize that around 50% of their earnings is coming from their international operations. It's euro-based, so sometimes their numbers look a little bit better just because of the global exposure that they have.
Gary, thank you so much for your time this afternoon.